and that did not last long. Pre-market high 46.75. We are clearing an important technical hurdle, or attempting to clear the resistance at 27.40. We'll talk about that with Dennis when he comes on. Moving on here, you have crude continues to slide down 42 cents at 65.39. Gold just hanging out at 1,300 here, up $1.50 at 1,380. Silver in the green by a little over 4 cents at 16.49. Bitcoin futures up $75 at $7,525, just hanging out here in the middle $7,000 handle. Let's bring on Mr. Bull himself, Dennis.
The bull hat on. I gotta get the bull hat. I need the bull and the bear hat. Right now I'd be wearing the bull hat, especially for the Qs.
The Qs are looking good.
It's a breakout Friday. Yeah. Yep. Tech is hot. Tech is going, man. I like tech.
You like tech, so you're looking for all-time highs here. I
still like the long tech, short banks really right now. If you're pairing it up,
how come the banks just can't get off the mat? And I got
Deutsche Bank. I'm gonna say it's still here now. There's something going on here. Yeah. Okay. Sure. Deutsche Bank's had a good couple of days. It's come back a little bit here, but we're not out of the woods there. So there are some issues over there, and that's why the banks are lagging. I mean, if Deutsche Bank started to get up and go up over 12, 13 bucks, the banks will start to take off too. Deutsche Bank is your indicator right now for trading U.S. bank stocks. I don't care. I know the TLT, obviously influences it day to day, but keep an eye on Deutsche Bank. If you're trading even U.S. stocks, that is the one, the U.S. bank stocks. That is your indicator, because as it rallies, you can see the last couple of days, Deutsche Bank is a little left. The banks get a little reprieve rally here. But I still think this is very much correlation here. There always was. But right now they're looking to that for leadership, because if Deutsche Bank goes to single digits, you're going to see all these banks start to make new lows on the move again. So keep an eye on that if that happens. I'm not saying it's going to happen, but that's why the banks are lagging.
And one other thing, just the opposite reactions to the jobs number. When we had the strong jobs number in February, incited a big sell-off in the market, right? There was, interest rates and everything. But now you have a strong jobs number, nice preview by El Presidente, and the market rallies off it. So it's just the mentality of the market, and nice rally on Friday off strong job numbers. Not that worried about where the Fed is with inflation. So just have to keep an eye on what the S&Ps are doing, and they're showing green this morning.
I'll tell you, though, what's leading us out of this is, and we're going to get to the conference, we're going to get to the other stuff, but I want to talk about the NASDAQ just for a little bit here, because also we retweeted a tweet from JC Pratt. It's a great chart over the weekend there, just showing the NASDAQ, and he was basically bullish, saying this looks like it's ready to go. Completely agree here. You are butting up against the 170 here for basically the last couple of weeks in the Qs. We broke out of that on Friday. This looks like a total breakout. I mean, we're not at the highs yet of the move, which was 175.21, but I think we're going to get there in the next day or two. So I'm saying all-time highs in the Qs by the end of the week.
By the end of the week?
End of the week. Doing it right now. I'll make you the bet.
Okay. What do you want to do?
Just lunch, though. It's a long one.
All right,
so it all it has to do is touch 175.22, and I win.
That's a big move, Dennis.
I'm bullish, man. I'm even, you know what? I'm giving up the edge on this one, too. I'm giving up the edge, but I have all week. And I want the after-hours session too.
Gosh, I don't want you grumbling. I don't want you grumbling if you lose this one. Oh, I gave up the edge.
You owe me 3 steak dinner still, so no, I'll be okay.
I won one.
Qs, I got the bet. The bet's on the table.
Okay.
New high by the end of the week.
All right, let's talk Biotech.
He doesn't want to do it. He's scared.
We're done. We already did it. It's done.
Oh, you did? You done? You hit the bid right away.
Yeah, right away. Slam.
Right away. Okay, you hit the bid. Okay, we got a bet. Look at this lunch bet. Early Monday morning.
Let's talk biotechs. I mean, there is some moving up, some moving down. What's the catalyst for that, Spencer?
The American Society of Clinical Oncologists, ASCO 2018 in Chicago, started on Friday, ends tomorrow. And there is just a ton of presentations, a ton of drug news. I guess we should start with Nectar Therapeutics, NKTR. They've got had, I should say, a very nice valuation there prior to this morning. The drug news that they came out with, though, doesn't seem to justify that, as the street is crushing the stock. They reported preliminary data that for a trial that is still expanding, and This is for their for Opdivo, or this is for their PDL1 drug, and the street just hates it.
Down 26% here in the pre-market. So this is your loser of the day. Obviously, the low of the move was back at $70.69. We were below that right now at $66.20. I mean, below 70, it's ugly. The stock was loved. I mean, this was one of your best performers since November. You know, November, this was a $20 stock. In February, it got up to 111. So way overdone maybe, and now it's coming in. I don't know. These things are wild though, and this is the problem. We can't trade. It's hard to trade these things technically. You know, when you've got, you know, data comes out, and biotech's always scary. Even as overnight trades, I'm sometimes somewhat cautious. Like even if I'm trading something, I like it, and for whatever reason, maybe I take an overnight trade in it. It's always a little bit nervous when you're in these smaller biotechs, because all it takes is like one, you know, study or something to come out randomly about a trial, and things can fall 30% overnight. And that's what we're seeing. You know, obviously, Spencer, props to you, because you were warning everybody, you know, about this conference that was going on, and to be careful with biotechs if you're trading there. I think you're even giving bullish comments on LOXO, which we'll get to in a second. But, you got to watch these conferences.
I think with regards to Nectar, I think the fact that they only gave preliminary data, and if you look at the daily chart, I mean, the stock has been ripping. The fact that they only gave preliminary data after with all this money they have, I think it was disappointing. Is how I am if you just go on Twitter this morning, it's a festival on biotech Twitter. There's every left and right. There's people going every which way.
And the stock was up $10 ahead of the conference.
Yeah, that's what I was going to bring up. Like what, you know, how
they got the wrong memo.
They got the wrong memo. They're piling into it, and you know, the breakout traders thought they were golden here. We're right near the lows of the pre-market session, down 24.30 at 66.05. 63.80 is your pre-market low. Pretty good volume being thrown around here. You're taking out the former low of the move. I don't even know. I mean, 54.63. I see that as your January yearly low. Don't think we'll be seeing that today. Trying to get a couple green candles off that pre-market low. That's the best level I can give you on the downside right now. 63.80.
That's going to be wild, though. These things are wild.
All right, let's move on to Loxo, which is one that I mentioned on Friday. They were sort of the star of last year's conference, and it looks like one of the stars of this year's as well. The news is that they reported positive interim clinical data for their Loxo 292 drug in a dose escalation trial. This is another, obviously, the whole thing is cancer drugs here. So the street loves that news. Stifel and Morgan Stanley both maintaining their ratings and raising their price targets this morning on LOXO.
Stock is up 22 points in the pre-market. It's a breakout. Somebody upgraded this last week. Who upgraded it? It was like Thursday, because I was trading it on the upgrade. It was
Piper Jaffray, who initiated coverage with an overweight and a $200 price target. That is already way above.
2 days later, those Piper guys know what they're doing, Joel. Nice. Anyways, 2 days later, they already hit the price target. So I don't know. Does that mean they just go to a sell right away here? The price target's hit.
That's up on 14,577 shares, moving this stock nearly 12%. It stopped on the button at 215, then sellers stepped down last bracket to 213. So keep an eye. I don't know if we're going to be seeing those levels, but keep an eye on it. We are now almost $4.50 off that 213 high. Former all-time high, the street leading the right way into this conference, way down at 187.38, close of 186.69. So a lot of air on the downside here. Let's see if anybody wants to take a profit. The stock ended 2017 at 84.18.
We've also got Merck here with data this morning, and it's trading up significantly. I actually, just this level, 62 level is big. So I've actually was playing a little bit from the short side just right here, right now. But it's got some buyers and wants to push through it. So cautious here, but 62 looks big to me. What's the data here anyways, Merck?
Their Keytruda drug improved overall survival rate on one study. There's so much data that they're releasing, so they improved the overall survival rate for one study, and I guess that's pretty much the headline here. They announced also a new 4-year data trial. But yeah, the improved survival rate is, I think, the driver this morning.
I mean,
All these
Keytruda,
stocks have
this
so many
pops
news.
up on Keytruda data all the time. And full
I know.
disclosure, this is one of the biggest positions in my investment portfolio. It has been for the last decade. It's been a good one.
Not a great one, though.
No, it's been good. It's been good. I bought this thing like $30 back in like 2009 or 2010. So I've doubled my money, and I was getting a 6% dividend on top of it all. It's pretty good for a big pharma stock. Like, I mean, people say, oh, you've got to look at what kind of stock it is too. I mean, Merck is one of your big farmers. It's not like a wild card where you're buying some small little biotech and, you need to double your money because there's a lot of risk. I mean, in this case, Merck is, obviously one of the big guns here. So I didn't see a lot of risk. But anyways, the thing's moving up here right now through 62. I don't know if it's going to, we have to see the kind of volume it's going to do. 1060,000 shares. Maybe it's going to open over 62, but the book is littered with size before that. I've actually got size of 61, 61 and a half. And then I have a whole pile of size of 62 as well. So I don't know if it's going to open over 62 or not. That's why it's kind of hanging out here. It wants to try to do it, but I think it's going to struggle to open over 62.
Yeah, it's there's a lot of highs in that area that you mentioned. Right around 62.11, 62.12, 62.13. So you see all those highs. Those are back at the beginning of the year. You might slip through there. And if you can't slip there, 62.59 was your January 17th high. This is a big move for Merck. Let's see if they can open it over 62. But I did see a lot of resistance there back from earlier in the year. And how many times can they move off Keytruda news, right?
That's what I'm saying too. And that's why as a day trade here, I'm almost a fader here. Like I said, I still like it long-term, my invest portfolio, but as a day trader, I almost like it from the short side on this. But it's early. Let it digest a little bit. Let's see where it is in another hour. And if it's looking like it doesn't want to open over 62, then, when the regular session starts, that's your bogey. If it, can open below 62, then it might be a short. If it can get up but take out 62, then maybe a breakout. But 62 is a big number for this. And we know what is good for Merck is always bad for Bristol Myers. And Bristol Myers is trading down here again this morning. Not that much, but slightly. We're down 50 cents, which is about 1%. But I've seen Bristol Myers multiple times tank on Keytruda data. So, because they got the competing drug there. Did Bristol Myers have any results of their own, or is this just down off Merck data? Spencer.
Bristol Myers they're supposed to present. I don't know what day though. I think they may have presented on Friday.
Maybe they already did some talking.
Yeah, they announced results as part of a phase 3 Checkmate 227 trial for Opdivo. I'm trying to figure out what the results were.
Look how tight these ranges have been here. This thing's been holding a trading range. Boy, oh boy, let's go back. Let's go back to May 14th. You've traded between 51.70 and you got near the upper end of that range, 53.40 yesterday. Now you're back in the middle. Recent low of the move is 49.96. So that $50
bucks.
Yeah, major support here.
Yeah.
But just trying to get off the mat. It doesn't look like it's going to get a head start today, trading down 53 cents in the pre-market.
I mean, if it gets silly and gets anywhere in the 50s, there's buyers down there at 50. There's been multiple times. That's where your major support is. We're down 50 cents only, so it doesn't look like it's going to get crazy. I did see a couple lows going at 52.01, but we know this market ball gets going in one direction, just continues to go. A lot of other drug news here, Spencer, from this conference. I think, the overall is just, watch if you're trading any drug stocks at all, because they could be moving on fundamental news. And I will say it again, I'm a technical trader. I respect technicals. But when you got fundamental drug data coming out, I don't care what the chart looks like. If that data is bad, the stock's going down. If that data is good, the stock's going up. So that's why I've always stressed on this show, don't be a one-trick pony. So many people just look at technicals and that's it. And they say, this is how it works. I really think it's one tool in your toolbox, but there's so many other tools to consider as well. So, charts are important, technicals are important, but when there's fundamental data coming out, technicals take a backseat.
All right, let's just take a look at Jazz. Thoughts on Jazz for Grant Wilkinson out of the YouTube chat here. And they presented long-term safety and efficacy data for phase 3 tone study. I'm not even going to try and mention that, but or what that is for excessive sleepiness. So let's take a look at NXPI, see if there's any, not NXPI, Jazz. see if there's any price action in Jazz Pharmaceuticals.
It's not moving this morning. The spread is huge, 115 to 170, 190. So there's no action here this morning on it. So maybe they didn't present, or maybe they haven't presented yet. But stock is breaking out.
Yeah.
You know who was he was bullish this too when we had him on the show, like before he went to jail. Remember Spencer like 2 years ago when we had
Squarely?
Yeah, Squarely on the show. He said Jazz was one of his favorites, and that was like the stock's like at 110.
I think you're right.
So
yeah,
he was. You know what? And you can hate him, but I'll tell you, man, he made good picks when he was on our show that day. Because he had the one.
Smart guy.
It was like 3 picks he gave us, and the one he said was a 0, and literally like the next week it went from like $2 to like 30 cents. Like, I mean, he knows pharma stock. I mean, so a lot of them hate him. The guy was pretty good.
No one ever said he wasn't smart, because
he's smart. He was smart. He wasn't smart, maybe street smart because of the stuff that he did.
Right.
I tell you, he was pharmaceutical smart.
Yeah.
So
definitely.
anyways, he said on that show that day when Jazz was like 110, he's like, I love Jazz. And it's 170 now. So I guess he made a good call there.
Yeah. What was the one that he said was going to
I can't remember.
Yeah.
It did though. It did. Like I don't know if it went straight to 0, but it went down on that news, which is crazy.
All right, do we have
like 2 days, like 3 to 4 days later? It was really quick. All right, let's move. So from the conference over to individual stocks here that I've got a lot of technicals I want to look at,
sure.
But I wanted to talk about these Chinese stocks, the little ones that we've been playing. Spinner's been in the chat, and a lot of our chat's been playing these things. The IQ, the BILI, and the HUYA. I sold the BILI. I wish I wouldn't have sold any of them. I'm still in the IQ. I sold a piece of my IQ. I sold a third of my position. I wish I wouldn't have sold any though, because these things just blasted off on Friday once again. So I look at this, and I bought this IQ, from Scott, my Twitter account, and and from Spinner as well, because these guys are bullish and these guys are good traders. And I didn't know much about it, but Scott was saying this is the IQ, this is the Netflix of China, and the chart was looking pretty good. So I was like, I'll dabble in that. I bought the thing at 18, and like a week later, it's like 20. Another week later, it's like 22. Another week later, it's like 25. Now it's 29. It's 29.80 this morning. I mean, I just bought this thing literally less than a month ago, and I'm up like 80% or 70% now. So I don't know. Like, what do you? This is kind of out of the realm of, because I usually trade the boring stocks. So when I'm in these high flyers here, it's kind of not my normal, cup of tea. So I don't know. I think 30 can be big, but I think this thing is just probably going to blow through 30 again here today too, because it just keeps going up. So I don't even know where to sell this thing. I'm at a loss here, Joel. I'm up so much so quick. I want to sell it like just at the market because I'm up so much, but it just keeps going up.
Well, you're doing it. I mean, you're parceling out, right? So if
I sold 1/3. I shouldn't have sold. I sold 1/3 on like Thursday at like 25. This thing's 29 and a half 2 days later. These things just keep going. It's been a mistake to sell anything, really, anything tech. Because the Momo too. I messed that Momo right up. I had that thing at 25. I sold it at like 34, 35 when it consolidated for that April-May period. And I was like, I think it's consolidating to go down. I was wrong. Consolidated to go up. And now it's $50. $50 today, Momo. Just keep going from that earnings. It's a gap and go off the earnings report. I mean, some of these Chinese stocks are so hot right now.
Why don't you just try and pick a point on the downside? Like if it, instead of like trying to say, 29.5 is high, say, if this, pick a level like, okay, if this breaks down below 27 or something like that.
Well, they do that, Joel. It'll do that probably like
today.
The problem is these things move 20% ranges a day. So when you have a stop in there, it almost always stops you out. I mean, look at the BILI, for instance. This chart looks good, but look at the range from Thursday. The thing goes from 17.13 up to 17.71. It goes all the way down to $15. You're talking about stock falling like 25% from the high in an hour and a half. And now it's back up there again. I mean, these things are wild. So your stops got to be so wide to not get stopped out in the chop, because these things it's not completely straight up. They're not that smooth. And if you just close your eyes and look at it 2 days later, it's 3 points higher. But there's a lot of rough ride in the middle of that. So these are tricky things to trade.
Yeah. And how's the volume on them? Let's see here.
Wild. These things are crazy volume. These things are really hot right now. IQ's already traded in the pre-market, 173,000 shares. These things are so wild. All the action is in these right now. I feel like I'm in like a hot potato here. And I feel like, eventually it's going to come back down, but it's like, man, I've, ridden some other things before too. And this thing is just like going straight up. So I agree. I think you got to stop yourself out at a certain point, but like on this IQ, where do you put the stop? Where do you say, like, if you say 26, well, it's still going to be in an uptrend at 26. And that's literally 15% below where it's trading right now. Where do you stop yourself out? If you were long this thing, and I am long it, where should I stop myself out? Chat, you can help with this too.
Yeah,
where's it stop? It's hard.
I mean, your lows have been. I mean, instead of like picking a hardcore, wait for at least something to stop going up. Maybe a consolidation, a couple highs and a couple lows, and then.
But they don't do that. These wild ones, they don't consolidate. They go up, 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 and then they crash down 30%, and then they go up. They don't just sit there and say la la la. They're not boring like that. They're tricky. They're tricky to do. I don't agree. I don't think you can just say, oh, I'm going to wait for 3 days consolidation. Because you don't get that in these stocks.
You did get
you get consolidation to go higher, maybe.
Okay, you did get some consolidation
to go higher.
Yeah, to go higher.
But when these things come back crashing out, like my fear is you got Andrew Left sitting there, and they're going to all of a sudden short some stock and then go, okay, this is just ridiculous. I'm putting a $10 price target on this. And it's going to fall like 30% on that tweet. I mean, that's the fear, as they got the bubble buster in the background. They're looking at something going straight up like this and saying, this is silly. I don't know how you value this thing. I don't know if it's silly or not, because it's a new issue. There's really not been much data to come. It comes, not even easy to read. So these things are tricky to trade. But I'll tell you, it's hot right now. Spinner says sell some calls against it. I'm going to say that is tough to do too, because yeah, you get some great premium, but you're holding on for a lot of risk. I mean, I don't know what you get for the 35s. You probably get a couple bucks, but you're taking in $2, but then the thing could be a 20 on you. So it's tricky to just say, okay, I'm going to write because I'm getting premium, because you're taking on risk. Spinner, you're trading these things too. So, let me know how, your trading IQ, because I know you've been in and out of this thing as well. But I'm still long it. I'm sitting up 70% in 3 weeks. I feel like a little bit like, ring the register type. It's an awesome move. But then I look at it still straight up. So I want to still participate somewhat. So these are tricky to trade.
Yeah. Well, I mean, you're on the right side of it. So, parcel out a third, another third, and then, maybe.
That's what I was doing. But I'm regretting the third I sold at 25. So it's fun to trade these things, but at the same time, man, they're tricky.
Let's
even when you're on the right side of the trade, it's tricky.
That's hard. Let's take a look at an earnings stock here. Not too many today. I think
just before I go to that, there's 3 or 4 other ones, and that chat likes talking about these things as opposed to going, to Palo Alto Networks. There, BILI is the other one. HUYA is the other one too. We've been talking about these things. They're all hot. And then let's go over to Spinner. Actually, was pointing out another one that he liked in the chat. We've been liking your picks there, Spinner, lately because you're hot. What was the one you picked this morning? It was SOGO. I saw you talking about. You were saying this one was this is a Chinese search or something. I don't know anything about this company. This was from Spinner in our chat, but I was looking at this chart. If it gets above 10, that would be interesting. SOGO. So I don't know much about this one. It hasn't been out there that long either. It was a new IPO just back in November of last year. So you're talking about stocks been out there just over 6 months. But I like this chart if it gets over 10. I don't know if I'm coming in this below 10, but above 10. What do you think of that one, Joel? That would be a breakout.
And what's the SGMO?
SOGO. SOGO. Do you know what this does, Spencer? Is it? I think Spencer said it was search in China or something. Is this the Google of China? What is Sogu? Sogu. I don't know how you say it, but SOGO is the ticker.
SOGO. I don't really know. Let's see. They are
internet search. Spinner says.
Yeah, that's what they are. They
above $10. I like it, Spinner. I'll be with you. Let us know. Shout this thing out if you're buying this thing above 10. I don't know below 10 because it's been major resistance there, but I like it above 10.
Yeah, it hit 999. That was back in March. It's been bumping up against it again here, so that could be a breakout. Your February high was 1047, but I like it. It's a new IPO. Came down hard off its IPO, but seems to be regaining its footing here. We had a close at 961 on Friday, so you only need to go, 39 cents in order to take out that $10 level.
Let's look over at a couple other. Well, YY is going to report on tomorrow afternoon. So, and this is another Chinese stock that's been taken off too. I mean, Baba's taken off. What's going on? They're all hot. Baidu is starting to come back, and it got killed.
Just help
but Baba
yourself.
broke out.
Just
Baba broke out over 200.
Forget the stocks and just play KWeb. Just play the ETF. It's got all.
What is that one? That's a good call. What's that?
It's the China A share. It's the China Internet A shares ETF. KWEB is the symbol on that.
Spencer with the collar. Look at that. If you want a little less volatility, because it's not quite as volatile.
Yeah, I'm more.
You get them all.
I'm more of an ETF guy, so that's how I would do it.
A little safer way to play maybe some of this stuff.
Yeah, that's how I would do it.
Not that anything is safe in right. China, but it's safer.
Right.
Yeah. All right, Joel, you want to go? Where'd you want to go?
No, I don't want to go there. I just want to talk about these wild Chinese stocks.
They're fun to talk about. Isn't this kind of fun to talk about?
Well, you know what? Also, I mean, the summit's on again, right? So last I heard, have you checked the Twitter feed? So
yeah, I think we're back.
The summit's on. Things are cool with North Korea, and then if things are cool with North Korea, things are cool with China. So everything's good again. So you don't just buy Chinese and North Korean stocks. And,
all right, let's go back to America for Joel. You want to go Palo Alto?
Palo Alto Networks, Spencer. You got some numbers for them?
I do have numbers for PANW this morning. Q3 EPS 99 cents versus 96 cent estimate. Sales 567 versus $545.7 million. So a beat on the sales and a beat on the EPS. Q4 sales guidance coming in higher than the estimate. 618 million was the estimate. 625 to 635 is what they said. EPS guidance for Q4 coming in a little light. Fiscal year sales guidance coming in higher. Fiscal year EPS guidance coming in pretty much in line.
Stock trading up $4 pre-market here. Well, 3.5, I guess now. This is a breakout too, Joel.
Traded up to 218.90. Wow.
Oh, it's off the highs.
Yeah, so it's back off the highs. Former all-time high that was just made a few sessions ago here at 211.71. So if you come back into that area, that was the area of the all-time high. Friday's close, 209.19. That was your all-time closing high. But just backed off here. Got a little overdone here. So hard to say, still in the green by 345. Really no resistance levels to talk about except for that pre-market high.
Jump over here just to a couple other stocks on the list there, and moving away from the earnings stocks because it's kind of a quiet earnings week.
Yep.
But just technically, I want to take it back to the tech stocks there. So we talked to Qs, but you've got multiple stocks breaking out here, major components of the Qs. Microsoft above 100 here now. That's a breakout. You've got Apple looking like it's going to break out here this morning above. We got up, just kind of kissed the high there from just 3 weeks ago there when we got up to 190.37. Well, in the pre-market, we're making all-time highs in Apple as well. This looks like it's ready to make the march to 200 and possibly to the $1 trillion market cap. So Apple in the breakout mode. You were pointing out Twitter. Twitter broke out on Friday. I'm going to point out Square. Square got above 60. Somebody in the chat, I forget who it was, talking about NVIDIA, but that's banging its head up against the wall at 260. I mean, tech is just hot right now.
And they hit that off the earnings, right? And then it's come all the way back. Yeah, they did hurt it.
Which one? NVIDIA.
Yeah. Look at that.
On good report, but it just run up so far ahead of it. It ran from 230 to 260 ahead of the report, like in 3 days. And then it reported good numbers, and it was just too much. But it looks like it's ready to go here too. I mean, it gets above 260, and it's off the races. AMD is broke out now too. I mean, there's just so many stocks in the tech sector that are just breaking out.
Boy, AMD, that's just been
a monster move.
Huh?
Monster move.
Look at this thing from 11 to 14.40, trading up.
Straight up.
43 cents at 14.83. We might be, we are sniffing some multi-year highs here. Got up to 15.65. That was in July of 2017, but you're in the area of potential resistance. Back in November of last year, you had a 14.41 high. You're above that right now. Maybe look out for like the whole number, 15. But is there any news out on AMD, or is just part of the tech fest here, trading up 3%?
I've seen no news on AMD this morning, so no.
This crazy move. Now it's looking like upside capitulation. You start getting up over $15, and it looks like, it seems like too much too fast too. But that's sort of the story. What's hot is hot. What's not is not. And if you want to go the opposite way and you want to talk about stocks that look like crap, GE looks like it's ready to break down here again. So here you have a market, that is looking like it's going to break out. All these tech stocks are hot, and GE is sitting here hanging on 14. I saw a commentary, I think it was from JP Morgan this morning, saying they're going to need to raise $30 billion or something like that to help with their ratings and help with other stuff. And I don't know if that's the case or not. That's a lot of money. Oh, that's just it. I mean, this stock is in trouble. I'm going to say it again, and I'm talking against my book. I have a small position still in my invest portfolio. It's fallen so far, and I sold half of it, so it's like 0.25%, like a quarter of 1% of my portfolio. I should just get rid of it, just don't have to look at it anymore, and I don't have to talk against my book. But anyways, I think this thing's going back to the lows. Unless they're going to come out and actually do something. I mean, every time you try to get bullish this thing, there's just more bad fundamental news. So the technicals will start to look good, and then there's more bad fundamental news. But now the technicals don't even look good. Now the technicals are starting to look bad. So for the last month and a half, it's had good technicals, and it keeps getting hit, on bad news. Now it's like it's got ugly technicals. This looks like doesn't look like it's sitting on a perch ready to go to 13, Joel.
Yeah, I mean, it's had a lot of support in this area here, so I would give it 1377. I mean, you do have institutions accumulating at 14 here. 1, 2, 3, 4 lows right around 14, trading above it. So I don't know. I mean, shorting it at 14, I'm not sure about that, but you definitely having some consolidation here. And it just seems like every time it tries to get off the mat, it comes out with some sort of bad news and it gets it knocked right back down. From the YouTube chat, Lululemon, on a tear on
Unreal
Friday.
Move.
Look at that thing. Trading
some of these retailers, the apparel retailers, are just like, it's like clothes are the hottest thing ever. Like the Ralph Lauren's, you can look even, and obviously the Lululemon, but there's just a ton of apparel retailers that are just blasting off. Like, I mean, that Ralph Lauren move is incredible. And now you got Lululemon, blasting off here too. I mean, it's hard to short these things. They just keep going. What's hot is hot. It's the same thing again. What's hot is hot. What's not is not.
What about Duluth Trading? I think they report.
I like those. I like their underwear. I have some of those. They're comfortable.
They report. They've
got commercials.
I know those are great. They wrote.
That's why I bought the underwear. And then you know what? I was like, these underwear are comfortable.
All right. Well, they report tomorrow before the open.
Oh, they do, eh?
Yeah. So
you think this is one? It's been in the doghouse.
Yeah.
Could this be one to come back?
Take a flyer on this one. All right.
I don't know.
Spencer, what do we got up here?
We got nothing actually. Kevin had to reschedule. So
he did.
Kevin, Kevin Kelly.
No guest?
Kevin Kelly had to reschedule.
No guest.
No apologies, everyone. So we're gonna you're stuck with just us for the day. It looks like.
All right. Well, we'll pound through this. I got all kinds of other stocks we can talk about on this list too. Here, so
yeah, we got
no
a lot.
Problem.
Wait, but there's one. I guess we should take this time to go. Let's go on the rant. There are several rants on the pre-market show this morning. We were a little fired up. What, Joel? What?
I'm going to take a break because Dennis is going to talk about Big Lots and resistant. I'll just wrap the show up right now, and then we'll just let Dennis go into his Big Lots rant.
There was a lot of the rants.
There was a couple. So
okay, so Big Lots. Okay, so it gets downgraded today.
Yeah, it got downgraded from Morgan Stanley. I'm sorry. They maintained their overweight, but they lowered the price target to $47. So
you know what?
And then Loop downgraded them to hold. That's what it was.
So Loop downgraded them too. These are chasing price because obviously the earnings last week and they disappointed, and it's trying to bounce back here. But a lot of these retailers have come back a long ways, and Big Lots cannot. And I mean, they lost their mojo. I mean, this was and I was a big, Big Lots fan, no pun intended. I used to go there, and 3-4 years ago, and I'd always find deals, and I'm all about the deal. It's a trader in me. I got the deal. And I used to, say, I'd buy a box of aspirin there, and the box would be crushed because obviously it fell off a pallet. But I get it for like 75 cents. And the aspirin's still good inside. I don't care if the box is crushed. And I'm getting it for 20 cents on the dollar, or 10 cents on the dollar in some cases. So I was getting the deals. And you go in the stores and a little bit, mucked up because people are, looking through stuff, almost like a poorer version of Walmart. Well, in the last 5 years, they've classed the stores up. They've got all, fancier stuff in there. They've jacked the prices. And it's like all of a sudden, it's like I don't find any deals in big lots. So the clientele like me who are coming there looking for the deals in the crushed aspirin box are turned off. And I think it's starting to show up in the stock price. I've said this rant. I said it the last couple of years. It's like, I don't go to big lots anymore. And I used to like it a lot. So I want them to, not class up the stores. They tried to, what you said, a great analogy. They were Walmart before, the Walmart of the small little, discount stores, and they try to become Target. And it's not working. Go back to being Walmart. Go back to, you don't need to class these stores up and sell higher end stuff. You need to go back and sell them the discount stuff that got you started. That's what made you hot. And I think you'd get our clientele back. But until then, I'm out on big lots and I don't like it. That's my rant.
All right. That was
Angie Baby says it stinks now too. They don't give you the deals anymore. You go to big lots to get the deals. And if you're not getting the crushed aspirin box for 75 cents, it's no good.
You only want your goods if it's been tampered with prior to.
Not tampered. So what happens basically? Like I think this is what and I'm not in the business, but I speculate this is what happens. Is that imagine you got some kid driving a skid with a bunch of pallets of product on it. Well, he bumps into the side of the wall, and this couple boxes fall off, a skid falls off, and it's like, okay, well, we can't sell the stuff in Target now because the boxes are all smashed. We'll send them to Big Lots. Big Lots will sell them, so they sell them for 10 cents on the dollar to Big Lots, and Big Lots will sell them for 20 cents on the dollar, and they make money like that. I don't see that stuff there anymore at Big Lots. Get back to that. Find those deals out there because I want the deals. That's what it is. Anyways, that's my rant on
the other
disappointed in the store now itself.
All right, so you want to do some quick,
that's why I'm disappointed in the stock.
Do you want to do some quick levels, Joel, on BIG or
BIG here? It's breaking down and it is not looking good. I had a decent day on Friday, but in the red this morning. Well, it didn't have a decent day. It ended up with a green candle. That low of the move was 36.20. You're $2 off that. I would just keep an eye on 38.69. That was your close from Friday, and 39.18 was the high. Really poor relative performer here. 35.86. That was your low back in February of 2016.
And then
the other rant.
The other rant, and these are both ratings related rants. So I guess we're going with ratings now. And it was a pair trade from
Gordon Haskett.
Right. It was a pair trade from Gordon Haskett, and the pair trade is on the dollar stores. It was an upgrade they did. They upgraded Dollar General from accumulate to buy. They downgraded Dollar Tree from buy to accumulate. Dennis, I do have some definitions.
Before you say that, and I'll let you come in, but I just want to rant about this. What the hell? So you've got an accumulate rating. So you're downgrading it to buy from buy to accumulate. What the hell does that mean? And you're going to tell me what it means because you went and looked it up. But if I'm just a layman and I'm not, going to go look up what it means, you're telling me to buy something. Now you're downgrading and telling me to accumulate. Is that not the same thing? Buy and accumulate. You're telling me to buy it. This is like, get a better rating system. So what do they say?
Buy more.
What does this rating system mean to them? Because it means to me, accumulate means buy means buy. So it doesn't sound like a downgrade at all. What does it mean?
This is the expected range of forecasted total absolute return. With the buy rating, they are expected greater than or equal to 15% total absolute return over the next, and this is over the next 12 to 18 months. Okay, so buy is the top of the scale, 15% absolute return or more. Below that is accumulate, 5% to 15% total return over the next year to year and a half. Then there's hold, which is either between down 5% and up 5%. There is reduce, which is down 5 to 15%. And then there is sell, which is total absolute return of minus 15% or more. So buy, accumulate, hold, reduce, sell. That is the scale at Gordon Haskett.
Okay, so a lot of the ratings, or a lot of these analysts have 5 levels, and I've seen that before, but it's just that word. Change the word from accumulate then. Like say, I don't know what you can say, because accumulate is buy to me and buy is buy to me. Buy to strong buy, I don't know. But in any regard here, it doesn't feel like a downgrade when you go from buy to accumulate. It just sounds silly. So I don't like your names for your things, Gordon Haskett. Change the names.
All right. I don't know. Those stocks got was it Friday that both of these got walloped pretty good?
They got hit.
Yeah,
they did.
So, I mean, if you're looking to come into these things, you at least want to see some kind of support, like a double bottom, or actually, it was Thursday they got hit. And I'm just looking at the Dollar Tree. You have a potential support here. $81. Like, if you really want to try a swing trade here, you're low on Friday, 81.01. You're low on Thursday, 81.31. Getting a little pop here. So there's a potential out. And then for DG, Dollar General, same kind of formation here. You made that low on Thursday, and that low was at 86.87. Had a higher high on Friday, 87.26. So maybe all the sellers, maybe they got it out of their system here on Thursday. I see big volume traded in Dollar General, over 14 million. So sometimes these things get a bounce. It's not so much new buyers come in. It's just like, everyone that wants out is out. And, your absence of big sellers is the reason for it going back up.
What I will say is we really got hit hard in 2017, and then towards the end of 2017, we came all the way back and made new highs on Dollar Tree, and I believe Dollar General as well. Now we start to come back down. If you're really thinking to get these on the cheap, I mean, the 2017 lows and Dollar General and Dollar Tree were both in like basically near $70. So there could still be some downside here. I don't know fundamentally on these, like, if from a valuation perspective, I haven't looked at them close enough to really say if there's value here or not. I tend to think that there's still probably a higher multiple on these, so that's why maybe it's getting hit here now. But I don't know these dollar stores. It just seems like so many of them now. Getting a $5 store, which 5 below.
5, yep.
It just seems like there's a different one on every corner, a different type of dollar store. So it's competitive. I mean, I like the dollar stores. I like deals too. But in Canada, they have Dollarama, which I believe is the best one, because I go on Dollar Tree and they have Dollar Trees in Canada, and it's not as good a stuff as the Dollarama. Now, the Dollar Tree is different because the Dollar Tree is like everything for $1.25, where Dollarama will sell like stuff for like $3, $4. So they have like some different stuff and some higher end stuff. But I always feel like the Dollarama is a better store in Canada. So I'm not a fan of Dollar Tree for that reason.
All right. Let's cover a few stocks here out of the chat. For Scott C, I don't know if we've had any news on CRSP or Edit. CRSP, that one was right.
Yeah, this is an ASCO, I think. Hold on.
ASCO conference?
I think. Hold on. Let me pull up the chart first, and then go through the pro. Whoops. But yeah, CRISPR Therapeutics. Is it ASCO? I know they had some news on Thursday. Let me confirm if this is an ASCO.
I'll just
or not.
You're under a little bit of pressure here in the pre-market trading. A couple big green candles, but a lot of price action in here. Keeping an eye on yesterday's low, Friday's low, 63.40. If you go into rally mode on this, keep an eye on that close, 67.13. Big range on Friday. This is just pure technical analysis here. This is not any kind of fundamental analysis at all. You have Edit. I think these are gene therapy, isn't that?
Yeah.
Trading up.
Yep.
Trading up $1. Half $1 in pre-market at 37.51. Big old range on Friday in this one too. So you want to make sure this stays green. 37.01 was the close. 36.65.
I think this is still follow through from last week when the FDA put their trial on hold.
Yeah, by Apple saying that in the chat as well.
Yeah, okay.
So that, put it in perspective, the stock was $10, $20 at the beginning of the year. Now it's 67. So you're in a wild child there. So if you're trading this thing, expect major volatility. This thing has 10% ranges on nothing sometimes. So when you actually do get some data coming out of this thing, this could be one that goes up 20%, down 20% in a heartbeat. So just be cautious. That's the one thing when you're looking at charts, and I always like looking at the 90 days because it gives you a feel for what the stock can do. And I mean, as soon as I bring that up, I'm like, whoa, this is a wild child. So, and it's not a stock. If it's stock or a company that I don't follow closely, that's always the first chart I bring up is like the 90 days or even, the 6-month chart, just to get a feel for what this stock has done over the course of the last 6 months and what it's capable of doing. And then you start to break down to the closer technicals and see, does it look, like it's ready to go? Or does it look like, breaking down? That's kind of how I go about my technical analysis. And, I take about probably less than 10 to 15 seconds when I'm looking at a chart to kind of get a feel for what I think is going to happen from technically speaking.
Let's talk a little Budweiser here. Trading up 328 in the pre-market at 96.70. I think you had a report from them and maybe an upgrade. This is an interesting chart here. Go ahead, Spencer.
Yeah, just an upgrade this morning.
Just an upgrade?
HSBC to buy. Yep.
Boy, oh boy. I mean, this is coming out of the gutter here. You definitely want to see follow through that pre-market high, which is 97.14. And then you got airing this thing up to, you got a gap to fill at 97.57. I don't know. That's trading up a lot just on an upgrade, Dennis. What's your calculations here? Is this just really light volume that's moving this thing?
What stock?
Budweiser.
The Bud. BUD. No, this is because it's an ADR, it's going to trade. So it's already trading over in Europe. Right. So this is trading on big time volume, already 190,000 shares. But it's already priced discovered. It's got a 5 cent, range here. Then it's a high frequency traders holding that in because they're just trading off the price that it's trading over in Europe. So Bud is actually trading here substantially up. This is real volume. This isn't just like painting the tape. So 96.70 is where it's trading right now. I mean, we're bouncing back. There's obviously news on it. I don't know what the news is because I'm not following the story closely. What do you have, Spencer, for BUD news?
I just said an upgrade.
Oh, it's an upgrade.
Yeah.
Who upgraded it?
HSBC.
Okay. So, and that's one thing to consider there too, is, when you get stocks overseas and they get, upgrades from overseas, they're more influential than, if somebody upgrades it sometimes from North America. So consider that. HSBC is, huge overseas as well. I mean, obviously, bigger over maybe the other way, but definitely influential, and that's why it's trading up. I mean, also stock's been at doghouse. When you get a stock in a doghouse, sometimes it needs an analyst to kickstart to get it out of the gutter. And that's what you're seeing this morning, Bud. But I just bought a 36 pack of Bud. Good beer.
Really? They sell that in Canada?
36 packs. Yeah, you know what? In Canada, you know how much 36. So, anyways, you can buy the case, but they just came out with this 36 pack. It was a little bit of a better price. How much did I pay for 36 beers, Bud?
$36.
$60.
Oh.
$60. Welcome to Canada.
That's a good deal. Okay.
Yeah. Kill you.
Can we talk about Apple for a little bit? Because they have the WWDC starts today, goes all week, the Worldwide Developers Conference. Not historically a big event in terms of big hardware announcements. Like, they're not going to announce a new phone today, but they will announce a lot of software updates. They're going to hopefully announce some augmented reality updates. Last year was the big announcement that they enabled developers to create AR apps in the App Store. So we're hoping for some momentum off of that. It was called ARKit. We're hoping for some operating system updates across the board, new models.
AR? Are they going to come out with something finally on AR?
Well, they have the AR kit, which is what enables developers to create AR in the App Store, create AR-based apps. So we're going to hope for another announcement to build off of that. Probably going to brag a little bit about their privacy practices and how they're better than Facebook.
Oh, we got Facebook news too that we got to talk about.
We do.
Yep.
And the last thing is one thing that a lot of people I've been reading are expecting them to talk about is how they're talking about how they want people to cut down on usage on their iPhone, and it's all about digital health. So they want people to be more healthy with regards to the amount of time they're spending on their iPhone. So maybe they're going to talk about ways to encourage people to not use the iPhone as much. Regardless, AAPL trading up this morning.
Yeah,
I'm sorry,
time.
That's Budweiser.
Trading up $1.40, 191.64. That takes out the all-time high, which was made on Friday. Your all-time high from Friday was down at 190.26 with a 190.24 close. That's what you need for a gap fill. Boy, this had after the nice ramp up, we have that long period of consolidation, and now another move up here. Really no resistance. I mean, trading right near the highs of the pre-market session. That stands at 191.79. You got to think about, that $200 magnet perhaps coming into play here. The only tech stock in the red here, Facebook here. More privacy problems with Facebook.
Oh, I thought you were referring to the fact that they're getting rid of the trending articles.
Yeah, did you see that? That was on Friday. That came out there. I tell you, they're innovative. They're trying different stuff, but the street's not liking the news today. Perhaps another data breach.
I didn't see. Oh, you know what? That's right. I did see that, and you know what? I glossed over it so fast because I thought Facebook data breach, whatever.
Old news.
But yeah, they did give Apple, Samsung, and other developers access to data. And their explanation, Facebook's explanation, was that this was before iPhones were as powerful as they are now. And they didn't really grasp the ramifications of what they were doing. So this is from years ago. Was the explanation? Yep.
So it's not that it was breach. It was that they were just giving, some of the data to other places we didn't know they were giving it as well.
That's how I understand their explanation to be.
Yeah. I mean, they're hitting it down here today, but this thing's still in a hard uptrend here. There's buyers on pullbacks now. So as we always said, overhead supply, I'm going to say underneath demand in this. Get down to the 180s, like 188, 189. I think you find buyers again. So I don't think this is going to go to the gutter like it did last time here. It's not a big enough headline. I actually think there's an opportunity to buy it. So I like it on the pullback.
Yeah, you made
as a trade.
Yeah, pre-market low 190.24. Friday's low 192.07. So keep an eye on that. That would be the gap fill. That's only a buck away. Besides the old-time high, which was made on Friday, 194.55. Your old-time closing high, 193.99. So little pressure on Facebook this morning. 500,000 shares are traded, so people are taking note of this data breach.
A couple other stocks that I had on my list to talk about, unless you guys have something.
No, go for it. What do you got?
Okay, so we mentioned Twitter. We haven't talked about it, though, in detail here. Twitter broke out, Joel, on Friday.
Yep.
It actually has just been on a tear here, really. If you look just since we pulled back there at the beginning of May, $28. Now we're up to 36. So you basically have 8 points here in a matter of a month. So it was a really good month for Twitter. 36.65 is where we're trading here. Or at least that's where we close. We're down in nickel here, maybe a little bit on Facebook. Sometimes it chases it a bit, but there's really not that much there. But you're talking about a stock that is kissing up near its high of 2018. We got up to 36.80 back in March. Now we're up here and we kissed 36.69. So a little bit of a bogey there at 36.80. Above that, you think this thing got $40 on the mind?
I tell you, it's really, I like to see the price action over the next couple days because it hit 36.80. That was on March 14th, I believe, after the report. And then they slammed this thing hard. I don't know if a downgrade got it or something that was going on in the market, but it could not hold that level at all. Now, if you could get up to this 36, even if you don't take it out, but you can hang up here for more than 2 or 3 days, get a little consolidation, then you can take a shot at $40. You haven't traded 38.82. Could be another potential target. That was your high back in July of 2015.
TT Mac in the chat was asking about HIMX. This was a Matt Cole pick too from Benzinga. I've got this in my portfolio there. Actually, I'm back to even on it. I had this one. I played this a few times.
That's good.
And it's got a nice valuation on it. It's got a nice little dividend, 2-3%. I played this from back in, I'd say like July or August of last year. I bought it actually just perfectly right before it blasted off. I bought around $8. It went up to 12. I held. And actually, believe it or not, I got out, I think, at around $13, near the highs of the move on this. I rebought it when it got to 8 because I was like, oh, it came all the way back in, May or, I think like January or February of this year. I rebought it when it got to 8. It went down to 6. Now it's back, and this is in the investment portfolio. It's back up to 8 here, so I'm back to even on it, but I'm holding it here now because now I feel like the momentum's on my side. I like it on pullbacks. It's up here again today. I kind of like the chart. I like the dividend it pays me in the meantime. Valuation is attractive on it. Been a good one.
They had some positive commentary from Barrett on Friday.
Okay,
which helped.
That helped.
Yeah.
So HIMX,
yeah.
Joel, I don't know what you thought.
I cleared a triple top at 780. It did that on Friday on impressive volume too. 1.8 million traded on Thursday. Over 5.5 million on Friday. So confirmation of an up move with good volume. 812 Friday's high. Looks like things open up a little bit, staying over $8. Also come out of the chat and Baidu. This one got hit. That CEO leaving. It was just like the worst possible news ever. found support here at 240.
Coming back.
Yeah, traded up 254 here. So, I mean, if you don't want to get a little bit crazy here, you could think you had a 284 high, let's call it 240 low, 44-point move, take half of that, 22. I could easily get this thing back in the 256, 260 area. When that news came down, you got a big gap, but yeah, sure looks like you had the drop, the accumulation, and now a little bit of return to the upside, trading up 279 at 51.25.
We've given a lot of love to tech. We've given a lot of love to a lot of stocks here today, but let's give some hate over to the consumer staples because they had an ugly candle really on Thursday, I think it was, like Procter & Gamble, for instance. It got up to 75. It put the double top in at 75 and broke down on Thursday. Friday, a little inside day there. That just means the range was inside the previous day. But this doesn't look great to me either. And I start looking just at all of these things. They're going to look at the XLP overall. It kind of looks like it's sitting there hanging on a cliff. I mean, if tech starts to get hot, money starts to go risk, if this market starts to go risk on again, all these consumer staples are probably going to start to get hit again here too. So I'm happy that I don't own a lot of these in my invest portfolio. I want to own some of these, but the only one I really got is Kraft Heinz, which hasn't been good. I mean, I'm happy I'm underweight this stuff, and it just doesn't look good here either. What do you think of the chart? Like XLP, what do you think of that?
I mean, it just had that huge drop.
Hanging out near the lows. It won't go up.
I mean, you're out. I mean, the XLP here, 26.46, trading at 27.63.
XLP.
Oh, what am I looking at?
Staples.
I got XLF. I was thinking financials on my mind here.
Yeah, XLP. Bring that up.
It's just hanging out at the lows of the move.
Yeah.
I mean, really needs
looks ugly.
Yeah, 50-50. You had a double top right in that area from Wednesday and Thursday. And low of the move, 48.76, but nothing. What's going to get these off the mat?
That's just it. If interest rates, if we start to get hot again, if you think interest rates are going higher, it's not good for this stuff. So, I mean, it's really, you can think about it, but the fundamentals matter. And we went into a rising interest rate environment a year ago. And if you look at all that interest rate sensitive stuff, like, consumer staples, the dividend plays, some of your REITs, it's all been in the doghouse. Your utilities, your XLU, I guess you can argue XLU hasn't went down lately, but really, back in October, we're 56, 57 bucks. Now we're 50. It's down 15%. It's a big move. Gold's just been in the gutter. Gold cannot get life here, it doesn't seem like. And I think gold is eventually going to take out the lows of 122 and break down as well. So it's risk on, and that stuff is risk off trades. So until you get some fear out there or you get something else going on, but even when we're getting fear, it doesn't seem like gold gets a kickstart. I mean, I don't know. Like, I saw, a tweet go by, I think it was from StockTwits, and they said, since 1998, I believe the tweeter, it was like the last 20 years, it's like the market's up. No, it was even further than that. It was like 1993 or something. The market, the Dow Jones Industrial Average is up. No, it was 1999, and they were saying the DIA came out and became an ETF in 1998. So in 20 years, and it's up something like 25% or something since then. Or no, not 25%, like 250%. And it's gold is up like more. So which would be shocking to a lot of people that gold has actually outperformed the market in the last 20 years. But let's put this in perspective. When you go before that, gold used to be a hell of a lot higher. So it was like a little bit of a reprieve because gold got down to like 300 bucks back in, 2000, which was just ridiculously oversold from, where was gold in the 80s, Joe? Wasn't it like 2000?
Yeah.
Something like that?
Yep.
I mean, you can cherry pick, your points like that and say, yeah, gold has been a great investment, but really it's all about market timing as well. And yeah, if you were lucky enough to buy the gold bottom at 300 or 400 bucks, it's been an okay investment. But if you've been holding this for 40 years, it's been an awful investment. I mean, the Dow was in 1980, 1,000. Now we're sitting at what, Dow? I don't follow the Dow close, 26,000? What are we on the Dow?
We are at the Dow. We went off the board at 24,635.
You tell how much I look at the Dow. I don't even have it on my screen. I don't have it anywhere. I never look at it because it's a poor indicator. 24,000. So from 1,000, 24,000, you can see we're up 24 times since 1980. And where was gold in 1980? I mean, if you go with the historical pricing, I bet it was similar. You're basically, if you bought gold and just held it for the last 40 years, you make any money. So gold, I don't care about that tweet from StockTwits is very misleading because if you bought the absolute bottom of gold, you did okay. But if you bought like 10 years earlier, it's awful. Gold has been an awful investment. And why is that? Like, just think about it. Like, does people wear gold anymore? Do they do? I mean, some of, it's sure there's still some, fashion. There's still a value to it. It's still a precious metal. But I don't see people just wearing and flashing gold everywhere like they used to. And, really, when you think about it, it's gold derives its value just from being, wanted. And there's other than that, wearing it and stuff. I mean, you're not doing a lot of things with it, right? What else do you do with gold besides like show it off and wear it? Seriously.
Well, you can't wear crypto.
You trade it, duh.
Okay, crypto.
You trade it, yeah, but crypto you can't do anything with. So, like, what these crypto? What about all these crypto ATMs they have coming? I read an article on that this morning too. We're going a little overtime here. What are your thoughts here on what the hell do you need a Bitcoin ATM for? I mean, it's not spitting Bitcoins out at you. Why do we have Bitcoin ATMs? They're everywhere now. There's like
ATM.
10,000 of these things or something.
I thought you said ETN. I was like, wait, what?
No, the ATM's like a Bitcoin machine. Okay. It's not going to spit Bitcoins out at me. Like, what do I need a Bitcoin ATM for? What is the purpose of a Bitcoin ATM? Chad, tell me, because I don't know what the purpose of a Bitcoin ATM is.
I don't know. The chart's not looking too bad, though. As long as it stays above 7,500, trying to challenge the lows of the move. But it's quietly building up some steam here. Trading in the green here by 75 bucks.
I can tell you what they do, Dennis. They act as a terminal to buy and sell Bitcoin. That's what you do.
It's like a little computer to just sit there and buy and sell. You have an ATM, so that's misleading. I usually think an ATM is going to give me money.
Well,
maybe you can sell your Bitcoins. Is that what it is? You sell your Bitcoins and it gives you cash?
You can buy.
Is that what it does?
I don't know if it'll give you cash, but I know you can buy or sell your Bitcoin.
Isn't the point of an ATM to give you cash?
Look, man.
Like, I'm like, at this, store, I don't have any cash on me. I can stick my bank card in my ATM and get cash. Well, I got to pop Bitcoins out. I mean, there's no physical thing. I don't know. It seems silly to me, but anyways, I guess if you just want a place to trade and go to a Bitcoin, I prefer just to go to a computer to trade if you want to trade Bitcoin. So anyways.
All right. Well,
rant on Bitcoin ATMs.
That's all right. Kevin Kelly, who was supposed to join the show today, he will join the show tomorrow at 8:15. We'll also be joined by Nick Shaheen, as we are every Tuesday. But that's going to be it for our show for today, at least. So keep your eyes peeled for ASCO news. If you're trading those biotech stocks, keep an eye out for headlines out of WWDC. If you're trading Apple. And that's going to be it for us. So have a good rest of the day, folks, and we will see you on Tuesday.